Metals, starting with gold. Yep, precious metals. Key level of significance there at the 1550 when we were topping out. Not of huge relevance now. We've got a 1350 level that's quite interesting over here, which we've just run a few times. We've bounced into a few times. Is this going to be inverted left shoulder, big head, right shoulder territory? This was a big dip back down. Or this be many shoulders. You've got a left couple of times, complexity, even 3 shoulders. You might have thought this would have been. This is why we don't trade reversals, by the way, guys. So this is a multi-time frame. It's a weekly look at gold. Here you had what could be a left shoulder, head, right shoulder. What did you end up doing? You continue to go down. You've got to avoid being preemptive with reversals, and this is why we trade continuation. But eventually you do get reversals. It's not to say they don't occur. It's just if you spend your time chasing them for the risk reward, they don't occur significantly often enough with significantly big reward relative to a tight risk that you get an outcome that is long run sustainable for your trading, if that's all you do. You once again have this entire complex. Here has a potential left shoulder, a head, and then you have this deep dip right shoulder. We prefer a shallower right shoulder. This is quite a deep dip right shoulder, but then it also has complexity in another shoulder again. So it's bouncing into this. But this is grinding up against this level, and each time it's being resisted. While before on the way down it did have enough volatility to poke its nose through, the third and final time it couldn't. Here you go, there, and there, just poking through and now selling off. So underlyingly, while the major bear side probably indicates that could have been a low, there is a grind line under this. It is a weak grinding up when you look at it at this time frame, the bigger time frame. Powerfully up, powerfully back down with a nasty spill there. One could argue there was some head and shoulder structure in there that might have in fact performed if you do it in the traditional HVF method manner, where you take the key round number that was run on both sides, which would be in and around the 1250 mark. If you pop that on 1250, you'll probably find that target did in fact perform. 1250, now I've already gone slightly past it, so that would be there. And my neckline isn't perfectly placed. That would have been there. You would have just made it. So you can see the difference on the HVF method way of head and shoulders versus traditional technical analysis, which would have had an ascending line. So you just made it there. But apart from that, grinding up back down to the key level, grinding up to that resistance point. Once again, that's the 1350. I'm not getting them perfectly on the mark there. Little higher, Francis, 1350, key round number of significance. We teach you all about this on a course. Go to the website, themarketsniper.com, and you can become part of the community. Hit the get starting button. Anyway, that aspect aside, bounce there, bounce there, bounce there, sell off, sell off, sell off. Grinding line coming up underneath it. This is generally, what is a grind line? You'll learn about that as well on the program. It's something uniquely we call there. Many people will say, oh, it's a trend line. No, it's not. It's not a trend line. This isn't yet a confirmed trend. And in fact, you fail to make higher highs. You're just getting marginally higher lows, and you're squeezing into what's kind of like an ascending wedge structure. But it's a concern, because usually you'll have a dip through the grind lines as part of a relieving aspect, and you could even have quite a bad spill. So that could end up giving you structure for an inverted, or it could continue its recovery. It could visit down, and then you break the 1350 level properly. That would be a major advance for the bull case if you get a proper. So let's drop it down, drop it down, drop it down, keep dropping it down. So there's your 1350. You need a proper break where you then can revisit and now support. That would be a strong event for the bull case. But first, now it looks like a dip down, and this grind line underneath here is not ideally good. You often have a break, return move, and you can soften for a while. So it's not overtly bullish, but we are above this funnel level. Interesting funnel level. Why did I put it there? This was the big gold move. This is when we called for 1300, and it had never gone that high, and everyone came out and said, you're crazy, it's Japan, it's deflation, it's never going to go up. Gold doesn't go up in deflation, which in itself is not either that accurate either. But that was the target, and that's pretty much what we'd run. All came about here. and this squeezed with a nice primer in it as well. So that funnel level. The reason why I'm showing you this is I'm going to go to silver next, and it's slightly more pertinent. It's not perfect on silver. It wasn't perfect. Gold is the boss market. You might see that that's slightly higher. So if you don't understand what I'm doing and what a funnel is, again, go to the website, learn about the HVF method if you want, but that will require an investment and for you to be pretty serious. So this macro setup, which as I've said was imperfect here, had us call for silver to do an even bigger move. So we were calling for over a 30% run in gold from $968 to $1,300. In the end, we called for a run from the 1718s in silver for a 30, which is an even bigger percentage move, which was attained. Note then the pullback and the huge overperformance. Overperformance begets future underperformance. Overperformance begets future underperformance. Overperformance, we didn't understand what happened. This baby kept running in terms of our targets here in gold, and then it hit a flat plateau to that descending wedge structure over here, descending lower highs, all trying to hold on to that base bottom, and then it let go of it with some vengeance, and down she went. So that was the gold. Back to the silver, similar type structure, just a higher beta version. Now you'll note that the silver is a lot flatter. It's a lot flatter. In other words, it's not recovered near as well as the gold did. Let's get the pointer instead of the line. Get the pointer. So what's happened is that funneling level, note how nicely this descending structure sat on the same funnel on the way up. Also descending structure in that descending wedge, not wedge, descending triangle. A wedge would have meant a downside angling line. So descending triangle structure there. Flat bottom, descending highs, flat bottom, descending highs. The flat bottom here is the upside funneling point. Where was the round number? Whoops, where was the axis? Right on the round number. Bang, your $18. So your $18 sprang you up to your $30+. That was a great move, impulsive in your favor. But then you felt like a sucker for making a whole bunch of money when it went even higher, but that then beget the future underperformance. So that's why closing there wasn't a bad result, although you would have thought for a while it was. Churn, 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 sell off all the way down, support on the funnel multiple times, then a dip below, then resistance into the funnel, down, 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 resistance into the funnel, down, smash through it. Okay, good. Bull season back, happy days. Not quite. Down she comes, smashing into it, still below it. So can't undo the negativity, but for a short period there. Volume, very big selling volume on that period. So that it's not selling volume, very big volume on a down day, I should say. For every buyer, there is a seller. Very innocuous candle, but there was big volume in silver right there as we came back down from the funnel. Was a bit like that on gold. So we're watching gold see that huge outlier day, both on the same time. Probably had the period when the stock market was wobbling a little bit, and you would have seen a little bit of that big day. Not particularly significant candle, big volume. All of this standout volume. So there was some significance to the rejection for gold at the 1350 level. Some significance, yes, at the 1350. Where was the silver being rejected? On that funnel again, the low side, the 17.4s. In and around there. So it's always remiss to do an assessment of gold and silver and not make a turn by the silver and gold ratio. So this has not been a bullish period for silver and gold more recently. Typically it's bullish as and when the ratio drops. So this is bullish for gold and silver, even more so for silver. These grind ups are bearish periods for gold and silver. In other words, how many ounces of silver do you buy with 1 ounce of gold? Remember, the base is always your first 3 letters. XAU, that's 1 ounce of gold. How many silvers do you get? When you get more silver ounces, that means silver is relatively underperforming and it's bad overall for the general market. In other words, that ratio stretches in bad seasons for precious metals. These spills through grind lines were actually momentary rally periods. That was a very good period. These are at near all-time highs. I think this was literally the worst period for gold and silver over here. Let's take a date stamp for you. That was 2008. Don't need to say too much more. October of 2008. It was the first. If we take a look at gold around about 2008. This was a very, very bearish period. I think it's probably that sell-off there. No, that's 13. In fact, we haven't got enough data. I have to go further back here. That's your 2008. Sorry. There. No. Yes, October. That's it. The lows after it was going up. Big sell-off, low dip, and it was the same for silver and the same point. So that was all part and parcel of sell-offs in silver. And here you go, when you have this real spike in the gold-silver ratio, that was a terrible period for both gold and silver. It was selling off, doing the inverse. So what's happening is we're getting to all-time highs selling zone. Usually the ratio reverses, but it has to be said, the reversal here, it stayed longer up at these levels, and it didn't reverse for as near as far as it did during this period, and it's grinding its way back up again. So we're spending a lot of time in this grossly oversold area for precious metals, and we're showing a tendency to hang out there for a lot longer. So it's something to watch. So it's an overall, even though we are at points where we often get rejected, the fact that we didn't get rejected as far and we found our way back quite quickly is not overtly brilliant for precious metals. It means we are continuing to show buoyancy on this ratio and bumping against the ceiling, the soft ceiling, as I'd probably refer to it, and nudging it up. So overall, it's not a bullish assessment for silver particularly, and certainly not particularly for gold. Gold breaks down to the grind line. It could get a little bit ugly. You can have revisits. We were excited by the beginning of this move and this move over here for the precious metals recovery, but there hasn't been significant follow through as yet. It has stopped going down, gold, but silver has been even more lackluster. It has really just had a pump off the lows and stayed pretty low slung for now in terms of this. So this is grinding out a potential bottom, but not with any great vigor in terms of where it once was. Think about how much money's been created since these moments way back in 2008. This, in dollar terms, should be a lot higher. It should be, if it was, who knows, if it was freely trading, if you subscribe to that, or if it is rare, which we keep being told that the billions of ounces that were once above ground are sub 1 billion now. You've got to think about the solar panel revolution and all of these things soaking up silver. Why is it so low for so long? If it's a manipulated market, how come people can actually get the physical delivered? Is the leverage, is the scale of the pyramid on per ounce just getting bigger and bigger to keep a lid on it? Who knows? Who knows? We can only speculate. Okay, so bearish view generally, or very basing slow bull view. Possibility on the ratio that we get some rejection coming soon because we're getting close to those all highs. That could bring some relief. But overall, concerning that we are showing a greater tendency to buoyancy on the upside here. We're setting a new normal for gold and silver ratio. Yes, it can revert back to mean at some point, but we'd need to see some proper smash downs. Remember that for many, this was 15 ounces long time ago. Then it was 35-ish, and now we've got this new period where it's very, very high. As I say, it may be manipulation, it may all be fake, but this is not looking strong. It's not looking like it's being allowed to get away. Could cryptos be hurting it and taking some of the gold buyer money away? It could, and silver. I don't think that many of the gold bullion dealers like the fact that cryptos are out there, but it could be harming their business a little bit. We'll see. Okay, that's Francis's update, technically speaking. And by the way, just for that wrap, that's themarketsniper.com. And you hit the getting started button. You can find out more about what we do. There's a vid there for you to watch to give you some information. Very short questionnaire to make sure that active investing is of interest and suitable for you. And then you'll get invited to our free webinar on the 13th of March. So enjoy that, and talk to you all soon. Thanks for watching.